Hi, in today's video, we're going to talk about the basics of an FHA loan, and we're going to start right now. Hi, my name is David Matney with Nebraska Realty. I'm a local realtor here in Omaha, Nebraska. Now, keep in mind, this information is for informational purposes only. You'd want to speak to a professional mortgage advisor in your market. All right, FHA stands for Federal Housing Administration. Now, FHA has been around since the 1930s, and it's designed to protect the lender from the borrower in case of a default. Now, why this is important is it allows people more opportunity for home ownership. Now, FHA loans are available for owner-occupied properties only. Now, keep in mind, you can purchase up to 4 units with FHA. You can purchase new construction with FHA. You can purchase a condo with FHA. Now, keep in mind, if you are purchasing a condo with FHA financing, the condo has to be FHA approved. So what that means is the condo association is going to have to jump through a few more hoops in order to get that condo approved. So if you are buying a condo with an FHA loan, you want to make sure before you make your offer that the condo is FHA approved. All right, one of the neat things about FHA financing is it has a very low down payment. The minimum down payment for an FHA loan is only 3.5% down. Another neat thing about FHA loans is you can receive that down payment as a gift from a relative. So let's say you have mom or dad or grandma and grandpa and they want to gift you those funds. You can have those funds as a gift, but it has to be documented and it has to be a relative. Okay, one of the things about FHA that's also really neat is it's going to allow somebody who may be a little bit more credit challenged, who maybe has a lower credit score, or maybe have a higher debt to income ratio, the opportunity to obtain a loan at a very competitive interest rate. Okay, the other neat thing about FHA loans is they're more forgiving if you just come out of bankruptcy, if you had a short sale, or if you had a foreclosure in the past. The waiting time versus a conventional loan is much shorter. So it's going to give an opportunity to a buyer who maybe has made some mistakes in the past or had a rough go of it, the opportunity to get back into the market and purchase a home. All right, what about credit score? What is the minimum credit score for an FHA loan? Now, each lender is going to be a little bit different. Now, you can qualify for an FHA loan with a 580 credit score, but lenders may have additional overlays or additional requirements in order to purchase FHA financing. So typically you'll see about a 620 credit score in order to be able to obtain FHA financing. Now, the neat thing about FHA, it doesn't penalize you if you have a lower credit score. If you get a credit score of 620 and somebody has a 740, if you're both purchasing FHA on the same day, you're each gonna get the same interest rate. So it's a neat thing about FHA. Okay, FHA is going to require you to have a job in order to obtain financing. It's no longer 2008 where you just had to fog a mirror. FHA is going to, you're going to have a job in order to obtain FHA financing. Now, what they're looking for is 2 years job experience. Now, here's the tricky part. If, let's say, you go from a W-2 employee to a 1099 employee, that may create a little bit of a challenge, okay? But if you're going, let's say you're staying a W-2 employee, then you're okay with 2 years of experience. But if you had a year and a half of working as a W-2 and then the last 6 months you've been at a 1099, then they may require you to go another 18 months before you qualify. So if you are thinking about changing jobs and purchasing a home, you want to keep that thought in mind. Okay, now FHA does have loan limits. Now, these loan limits are dependent on your county that you're living in and the state you're living in. I'll include a link in the description below about the loan limit in your area so you can look up the loan limit in your area. All right, FHA does require mortgage insurance. Now, when you're purchasing an FHA loan, like in our example, we're buying a $200,000 house, we're coming in with 3.5% down, which is $7,000. So we're getting a loan for $193,000. Now, FHA is going to require an upfront mortgage insurance premium of 1.75% of the loan amount. So in our example, that'll be $196,377.75. So even though you're getting a loan for $193,000, you're actually financing that $196,377 is your actual loan amount. Okay, the other item that FHA requires is a monthly mortgage insurance premium. Now, the bad thing about this is for the lifetime of the loan. Now, it's calculated at 0.85% of the loan amount. It also depends on the amount of down payment, but for 3.5% down, the calculation is based off 0.85% of the loan amount. Now, for our example, that comes out to be about $136 a month that you're paying additionally to insure the loan. Okay, one of the requirements of an FHA loan is an FHA appraisal. Now, here's the thing. If you're buying a home for $200,000, FHA wants the property to be worth $200,000. Okay, now the other thing that FHA requires are health and safety issues. So let's say you're buying a property with some missing handrails or some peeling paint. One of the things required with an FHA appraisal is they're going to go in and they're going to require that seller to scrape and paint that peeling paint, and they're going to require them to install those missing handrails. Or another thing that frequently pops up are exposed wiring. That wiring will have to be covered. So the appraiser is going to come out, look at the value of the property, and then they're going to look at those health and safety issues. If they require those health and safety issues, like let's say they find some exposed wiring, before the property closes, the appraiser is going to go back out and make sure those repairs have been completed in order for the buyer to obtain their financing. All right, with all those repairs, one of the questions you might ask yourself, what about a fixer-upper? Can you buy a fixer-upper with an FHA loan? And the answer is yes. It's called a FHA 203K loan. Now, it's a little more involved, but let's say you want to buy a fixer-upper and remodel the kitchen. You can do that. You'd want to speak to your lender because, again, it's going to be a lot more involved in order to finance those repairs. All right, there you have it. Those are some of the basics of an FHA loan. Now, if you like this video, go ahead and subscribe to my channel. Go ahead and ding that bell and give this video a thumbs up. Make it a great day.